Farouk, is it live? Can you hear me? Because I need you folks to focus on what I'm about to say. This is video 2 of how to value a community pharmacy. And in this video, I'm going to be explaining to you how we can do exactly that. In our previous video, I explained to you that you have a set of financial accounts, and what it says is it's unaudited. So that means that these accounts have not been verified. Everything that's in here is dependent on whatever the director has said for them to be, and that's taken as word. They've not been double checked. What does that mean? What it means is, how do we know that that value is correct? How do we know that value is correct? What if, for argument's sake, I borrow some money and it comes inside to the account, and I tell the accountant that these are sales. The accountant is going to say, okay, there must be sales. He's going to put that part of the turnover. But actually it was a loan. So it should not be as sales. You see? Because everything depends on the information that is given by the director to the accountant. Now, for you folks out there who are going to start saying, why would somebody do this and blah, 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 and come up with reasons why the accounts are probably genuine. I'm not saying that they're not genuine. I'm not saying that someone will do or manipulate the figures. I'm not saying that. I'm saying you as an individual who's going to buy a business needs to make sure you do your due diligence. Later on, you cannot complain and say, oh my God, these figures have been fiddled with. That's your problem. That you should have checked. So we're talking about due diligence. The most important fact is the turnover. Everything else you can figure out. For example, we know that a community pharmacy, and I'm having to change this paper around, the gross profit should be at least 30%. And that's with any business. Just think about it yourself, right? For every £1, if you're not saving 30 pence, you're going to have a problem. How will you pay expenses? So the gross profit should be around 30%. Okay? We can also figure out the cost that's involved with staff. So pharmacist, you can say on average £35 an hour. Staff, you can look at the minimum wage, but include the tax, £15 an hour. So you can calculate this expense. You can also calculate the expense for an accountant, maybe £1,000 a month. Rents and rates can be figured out. Just visit the website, have a look at business rates for the area, and you can also call around some estate agents and find out what the rent is. So all of this, all the expenses, you can pretty much figure out. That's not rocket science. This is the problem. How do you know that these sales are correct? And what I want to bring to your attention, if you're a community pharmacy, that are these statements here. The NHS statement. Essentially, the NHS statement, you need to get hold of at least 6 months worth, and then all of a sudden you can check. So let's have a look. What you want to look at is this number here. Or you can say here. Right? This is the total income that had come in minus NHS charges, which you've already received. That is what the NHS owes you. That is actually sales. But I would look at this figure here. So this pharmacy is getting about £50,000 a month. So £50,000 times 12, that's about £720,000. Is that right? 5 2s are 10, 5 is 600. My bad, £600,000. So this pharmacy, the NHS sales is about £600,000. If on the profit of, if on the turnover, there was 1.2 million turnover, question marks. Wait a second, your NHS statement is showing £600,000 in the year. Where did the remaining £600,000 come from? Is it over-the-counter sales? Where's the extra income come from? So that's one thing that you can check. You can definitely verify the NHS income. And in the previous video, if you remember what I said, 80% of the business turnover is normally, you guessed it, NHS income. 10% is around over-the-counter. So if you saw these statements and you said, wait a second, and you're going to get at least 6-7 month statements, historical data, and you calculate the average, the actual average, your NHS income is around £50,000. That means in a year, 600,000. on your turnover, it says that your turnover is 1.5 million. So you're telling me that the remaining money must be over the counter? Could be true, but something's not adding up there. And even if it was true, it would change the value of the business, but you can't verify that now. You cannot verify the other income because that income is dependent on the till sales. What if those sales are not correct? And you could be smart and you could say, show me all your bank statements, but no one's going to show bank statements because you're buying the NHS business. You're not buying his whole, and you're not buying all his records and everything. You're buying the NHS business. So you have access to this. So that's the key thing, is how do you verify? Easy. You can verify here. Okay. Some other things that actually I want to point out about accounts, which are worth looking at. And again, this is not, I'm not doing I'm going to make a business on how to read accounts for anybody, but something else I wanted to go through. And as you can see, Farouk, who's making the video, is going to get upset because he's like, why is it not already prepared?
No, I'm okay.
Apparently he's okay. Right, we can have a look at detailed accounts. So the NHS sales was about 1 million for this business. The OTC sales was about 50,000. So you can see that the numbers are stacking up. Majority of the income, around 80%, is definitely NHS. Okay. The stock in that business over there was about 37,000. Reasonable, I would say. You can figure out salaries and figure that out yourself. Rent is not too bad. It's only 14,000. In some places, a lot more. And the rates are quite low. So this is good. This establishment cost, because think about it, look at your fixed costs. Look, your stock, you can adjust. The business rates are fixed. They're more likely to go up. The rent is likely to go up. You might be able to buy electric cheaper. Staff costs you can change, but if the rent and business rates are too high, how will you make that business sustainable? So it's really important to look at the rents and the rates. Is that business sustainable? Because these are fixed costs. Fixed costs. You can come in and change the employment costs. You might work there yourself, so it might be self-run. So you can do it self-run. You might also say, actually, other than being self-run, I'll get my family in there. We're going to reduce our staff costs. You can see you can reduce the staff costs, but some fixed costs you can't change. So that's why the rents and rates are important as well. But again, all of this can be figured out. You can get the stock valued. That's easy. Employment costs you can figure out. Establishment costs you can verify. Tax you can figure out. How do you confirm the turnover? The most important question. And I've explained to you what you need is the NHS statements. Thank you for watching, folks. Subscribe, like and share, and have a wonderful day.
Perfect. Great.
Farouk, is it live? Can you hear me? Because I need you folks to focus on what I'm about to say. This is video 2 of how to value a community pharmacy. And in this video, I'm going to be explaining to you how we can do exactly that.